welcome. You're watching NDTV Profit and you're tuned in to the small and mid-cap show. I am Hiral, Dadia, and with me is Hersh, Sayta. Good morning, Hersh.
We have Prasanna Kumar, who's the CMD at NLC India, who's joining us. Sir, if you can help us dissect the numbers a little bit here. Certain exceptional items which continue to reflect in your profit and loss. How should one look at the performance given these one-offs?
As you rightly said, there is some regulatory movement and some favorable orders in favor of NLC India Limited. In the last quarter, that added to our revenue and EBITDA and profit. But our performance levels also compared to quarter one and quarter two, it is better both in the generation as well as the coal production and lignite production. And this affected because of some rains in the southern part of Tamil Nadu and Tamil Nadu in the entire state. That affected our generation and production levels. Otherwise, there is a lot of improvement in comparison to quarter two and quarter one. And in the quarter four, we are expecting that our performance is further will be improved and we will be reaching whatever targets are set by Government of India.
Right. Prasanna, one question I have with regards to the exceptional item in terms of this quarter. There has been an expense worth almost 1,638 crores in the third quarter of FY23 versus a gain of 63 crores in the third quarter of FY24. Now it says this has been, what does this pertain to? Because if this was taken into consideration, then the numbers would have looked a little different.
Actually, there was some appeal pending with the APTEL after the CERC order regarding the lignite transfer price determination. That came in the favor of NLC India Limited. So this is mostly related to the APTEL order related to the lignite transfer pricing. So that is added to the as a regulatory moment to this financial balance sheet.
Sure. So, you've guided for a target of 100 MTPA with regard to your mining capacity by 2030. How do you intend to phase this in? How quickly do capacities start getting added? If you can give us a visibility, maybe over the next 2 years, how much does your capacity go? You're currently at 50 MTPA.
Yes. We are currently at 50 MTPA, 30 MTPA lignite and 20 MTPA coal. And our one mine, Pachwara South Coal Block, which is in the state of Jharkhand, is on the verge of starting the production. We are expecting the production by June 2024. That is 9 million metric ton capacity mine. And in addition to that, recently we won one commercial block, North Dadu in the state of Jharkhand, of 3 million metric ton per annum capacity. And we also participated in recent commercial auctions where we are expecting a major block in the name of NLC India Limited. With this, with all these things, we are hopeful that we will be reaching the 100 million metric ton target by 2030. And we are envisaging a capex of more than 9,000 crores for this mining business by 2030.
Okay. Overall, if you see in terms of the renewable space as well, Prasanna, the government has come up with a couple of announcements in the budget as well, specifically with regards to wind and solar. Now, if you have to take solar into consideration, how is it that NLC stands to gain out of the announcements?
Madam, actually NLC India Limited was the early starter in the solar. We were the first company in the country to add 1 gigawatt capacity. And we are targeting to become a 6 gigawatt company by 2030. So already 2 gigawatt projects are in pipeline at the state of Rajasthan and Gujarat. And as you rightly said, whatever announcements were made during the budget speech, the focus was being given more to the rooftop solar capacity addition and as well as offshore wind capacity. And both the measures are very much useful in reaching the target of 500 gigawatt by addition by 2030. So we are already taking all the opportunities, exploring all the opportunities for the rooftop solar, and also we will be making the due diligence for the offshore wind also.
Understood. And so, so a ton of capex which is in the pipeline as we see it. How do you plan to fund all of this capex? You've recently paid down on debt. I mean, by recently, I mean over recent years, the last couple of years. Would you start to now scale back up with regard to your borrowing plan?
Yes, actually, as you rightly said, we are having a capex plan of almost 82,000 crores by 2030. Out of that, we are spending 46,000 for the thermal, 24,000 for renewables, and around 9,000 crores for the mines. And recently, Honorable Prime Minister laid foundation stone of our 3 into 800 megawatt the ultra supercritical thermal power station in the state of Orissa with investment of more than 27,000 crores. So with debt equity ratio of 70-30 for thermal and 80-20 for renewables, we require an equity of around 21,000 crores by 2030. So we are planning to fund this equity through the internal resources and the asset monetization program of the renewables of 1.4 gigawatt, which we are doing through our 100% owned subsidiary, NLC India Renewable Energy Limited.
Right, so Prasanna, with everything said and done, FY23, we've seen a revenue number of almost around 16,200 odd crores. Margins were in that range of 35%. Profits in that 1,400 to 1,500 odd crore kind of a range. What is it that you will look at in terms of FY24 and FY25? Because clearly, if you see from a margin perspective, we've seen a dip this time around as well. So what's that number looking like for both the years?
Madam, the dip in margins in some areas, that was on account of some post-measure conditions and the weather condition. Otherwise, we are hopeful that in 23-24, it will be better than the last financial year. And going forward with the commissioning of our Ghatampur thermal power station unit number 1, our margins and revenue will further increase.
Right, and talk to us, sir, about pricing. We've seen lignite prices fall over the last maybe 3 to 4 quarters. Reached its peak around April, May. Please correct me if I'm wrong. So where do we see pricing now? Do we see it stabilizing at these levels, or how should one look at it?
Actually, last 2 years were exceptional. There was a coal and lignite shortfall scenario. That's why the rates were very high. But now the rates are stabilized. Both the coal and lignite prices are stabilized. And we are, although we are getting less price per ton for the coal, our revenue from sale of the coal is more, because we increased our production levels so that the revenue from sale of coal is more than the last financial year.
Right, so that's with regards to NLC. Thank you, Prasanna, so much for speaking to us at NDTV Profit. If you see the stock as well, it has been a multi-bagger. Let's just pull up a one-year chart. You'll see today the stock is trading slightly under pressure, and I think mainly it's the margin profile as well, which is played spoil sport this time around. And if you see from a profitability perspective, it's just the exceptional that we're taking into consideration, but clearly almost 3 to 3.5 times is the kind of gains that we've seen in the last 1 year. Azko Nobel, that's a stock to focus on as well. It's Dulux paint brand that all of us are aware about. The stock is down 1.3%. Overall, if you go to see, the profits have climbed, and this is mainly on the back of a strong demand. They've surpassed a top line of almost 1,000 odd crores. Margins have improved as well on a year-on-year basis. Let's welcome in Rajiv Rajgopal, Chairman and Managing Director at Azko Nobel. Rajiv, good morning and welcome to the show. My first question coming to you is, overall from an earnings perspective, improvement in terms of margins and profitability. What has worked and where do you think is the deficiency?
Good morning, Hiral, and good morning to all the viewers. Yes, so we've had what I would say, a rounded performance in the last quarter. It's been a bit broad-based. Where we've done well on the decorative paint side of the business has been more in the luxury segments as compared to, and the adjacencies of waterproofing as compared to some of the economy and the mass, which is also reflected in our stronger contribution margins. Yeah, the second in my view, when you look at the coatings business, I think we've had a fantastic, performance led in the industrial coating, powder business, and in our automotive and refinish business. We've had a bit of a challenge in the marine and protective. It's only in the quarter, 9 month, they're still doing very well, largely because of some back end orders which have got sort of delayed due to various reasons and a bit on seasonality. Yeah, so that's the sort of performance. The margins were pretty good because the raw material deflation has continued. We've seen a bit of a stronger work happening on a lot of cost efficiency programs, and also our digitization at our back end has been strengthened. So that's in all what I couldn't sort of talk about, which is reflected in the quarter gone by.
Right, Rajiv. Hersh also joining in. I want to talk to you a little bit about what you just spoke about with regard to premiumization. Is that also contributing to the margin uptick? Because you mentioned 3-4 reasons and premiumization wasn't one of them. What I actually want to try and delve deeper into is how is this premiumization playing through? Is it a one-off, given the fact that October to December was largely a quarter where you will see a lot of B2C happening, or was it more structural?
No, good question, Harsh. So firstly, when I said in the decorative luxury has done well, for us, luxury is a strong contributor as a part of premium. And hence, yes, there is a premiumization. We see slightly different, perhaps from the industry. We see premium continuing to do well. 2-3 reasons for it. I think we've got fairly strong iconic brands, whether it's Dulux Velvet Touch or Dulux Weather Shield, where we've got 3 brands: Dulux Weather Shield Powerflex, Max, and Dulux Weather Shield Protect. All so we've seen a rebound in that segment. One, because we provide the best-in-class quality. Second, after we launched a program called Dulux Assurance, which which is a money-back guarantee for any consumer. Say if Harsh, you decide to paint your home and you have a problem with either the color, consistency, or coverage, it's an offer which is available, and we've seen a tremendous uptick post that because we are very confident of the quality that we offer, and we are willing to do a money back guarantee with our customers and consumers, right? So we've seen a strong climb back after that, because consumers also have given a validation to the fact that yes, this is a strong quality brand. So it's led by quality, but you will see a lot more work happening on new product launches as the year goes by. As we start getting towards the festive, this time Diwali is going to be in October, right? So you'll see a lot more work on advertising, branding, and in terms of digitization. We are also into a lot of analytics, and also building our digital platforms to try and make sure that we are also able to serve a very small niche, but consumers who are also going into DIY. Very small and niche, I must say, but you can see we've got to be patient there, because that will suddenly one day uptake, and we want to be ready in terms of platform, products, availability, etc. That's what's leading to the premiumization doing well, and I think we are well placed. Is it a one-off? No, I believe that. I think it's going to be, we should be able to continue that, unless there are some headwinds that we see where consumer purchases sort of come back there. Yeah.
Okay, I also want to understand, Rajiv, from you as to how volumes are doing in the business, because you've seen a bit of a volume uptick in this quarter. Is that a trend which you expect to continue, given the fact that generally when the real estate construction side of business does well, as well as infra is doing well, that's not a cycle we've seen too many times, and both of that is playing in parallel this time around, and paints generally benefits a year after we've seen the real estate cycle benefit. So please talk to us about how you believe the numbers will change in FY 25-26.
Yeah. So, I believe that, look, we will continue to see a volume growth at least for a year or so, right? So at least till in the coming fiscal, we do see that we should, at least for the first 9 months of the year, we will see strong volume growth. Why? Because simple, we had taken a lot of price increases. The industry had taken a lot of price increases due to raw material inflation. Now with deflation, obviously, and the margins reaching where they have, we believe that there'll be a lot of reinvestment on the brands in terms of making sure we get the right price points back and making sure that we are competitive enough to make sure that consumers buy us. So we will see volume growth. We will continue to see double-digit volume growth going forward. Not just in the current quarter, but also in the fiscal, 25, 26. Yeah. Two other reasons that we'll see it from our perspective. Look, we are obviously slightly under indexed in the mass and economy segment, and obviously we are trying to make sure that we start getting our fair share there. That will be another reason for an uptick there. So these are two strong reasons that I believe that we should continue to see strong volume growth. In the paint side of the business, coating side of the business is going to be driven by core sector index, is a reflection of how the industries are doing at this point of time. We believe that it will, but this is an election year, and we must be a little practical in the fact that typically in the months of April, May, that's in the first quarter of the new fiscal, you will see a little bit of a slowness before the results are out and we know the government is put in place, etc. And then we start seeing infrastructure again pick up. So typically we've seen this in 14 and 19, that during the months of the election, there is a little bit of a slowdown for natural, obvious reasons. But after that, again, you see a quick uptick. We believe that the same will get repeated.
Right. So, Rajiv, overall, let's look at, the margins as well. We've seen a 16.1% this time around. If you have to extrapolate from the top line, bottom line and margin perspective, what is FY24 and 25, taking into consideration the demand and the growth you're envisaging, into consideration on the volume front, how will these numbers look like?
So let me, I always believe that, look, ultimately we are in business because, we've got to make sure that we are a profitable player because we are a challenger brand as a number 4 brand in the decorative paint segment. So I always start saying, look, I think we want a fair share of the profits. We believe that, look, 13 to 15% EBIT margin is a good place to be in. And then we start looking at saying, what really do we want to do? We want to now start gaining market share. And that is what will start reflecting in the top line. We don't give guidances in terms of where it is, but I do believe that in the medium to long term, we do intend to, and even if you look at our current performances, we do intend to be in the top 2 players in terms of incremental growth. I think that answers your question, Hiral.
Right, absolutely. Rajiv, my last quick question is, you have a year on the ground with regard to rural. I want some guidance from you or some thought process as to which direction is rural moving in. You've invested a bit with regard to even supply chain in rural in the last couple of quarters. You've been doing that. What's happening on the rural side of things? Are you seeing a recovery, and how is Azko really tapping into it very quickly?
Yeah. So look, for me, rural is doing well primarily because I'm a very under-indexed in rural right now. So what I'm seeing may not be reflective of the industry, or even, if you take an FMCG in general, it's slightly different. But what I'm seeing, since you're asking me that question, I do believe that, look, I think there have been inflationary pressures which have impacted rural demand. When I've traveled across and seen markets and looked at consumption levels, and people are sometimes delaying gratification of certain categories, which sometimes including us, right? But I think that is now more or less settling down. I believe that there will be a period of time in a month or so when we will start seeing rural come back. We had some unseasonal rains which impacted crop pattern in certain states, which has also been a bit of a challenge. But I do believe now, in the current quarter, you may see a minor upswing, but you will start seeing the real upswing after the elections are over and everything is back. People will start now really getting into consumption demand. I see this year as being a stronger year for rural compared to the year gone by, the coming year.
Right. So some positive there as well, Rajiv. It's been a pleasure interacting. We're completely out of time on this one, but good luck on the following quarters, and congratulations on a good set of numbers. But with that, we're completely out of time on this edition of the Small and Mid Cap Show. From Hiral, myself, everyone who puts the show together, thanks so much for watching. More on the other side. Ask Profit.